Hey everyone, welcome to High School Dropout's Advice. If you need subtitles, click on the subtitle button right here. Today, I want to use the Ehang stock and give you a realistic price target for Ehang in the next 5 years. But more importantly, I want to talk more about the mindset of investing and share with you some ideas that have helped me retire in the United States within 5 to 6 years of living here. Let's have a quick look at Ehang today. We see a big drop of 9% and we had a gain of 9% yesterday. So the drop and gains are massive for Ehang at the moment. If you want to watch more news of Ehang and the drone companies, this part will be up here and in the description below. This video will have to do more with the technicals and the mindset of investing. We see that Ehang is building a support line at the $33 level. I think this will be pretty much the bottom when it goes up from here. We also see that only 6.92% of the stocks are short interest, which means that even short sales are stopping to short Ehang because they think it's pretty much the bottom. The 16th of April and a couple of days after the earning release can be a catalyst for bigger movements. From the market analysis, we can see that there will be a 28.8 billion global passenger drone market size. If we give Ehang 15% credit of the market size, Ehang will have a 4.3 billion in market size to work with. If the price to sales ratio is around 10 times, we will have a market cap of 43 billion for Ehang, which is about 22 times today's value. 22 times within 5 years is not unusual for a growth stock. And we know Ehang tries to be way more than just the passenger drones. If we look back in history, there were so many stocks that could 10x or 500x our investment. But we don't see anyone realizing those big profits when we look around. I try to explain you the mindset of the most investors and share you my ideas and observations. I'm the opinion that it's not enough to tell you which stock is good and which stock you should buy. More important is also to share the mindset of successful long-term investors and present you results to understand that it's the mindset that makes money and not the stock. You might know so many investors saying that they had invested early in Amazon, Google and Facebook, but for some reason they all had sold their stocks at some point. They missed out on the market. They missed out to make 20x, 30x, 50x or 100x of their investment. Many of those investors blame the market, the 2008 financial crisis, the dot-com bubble, personal reasons, etc, etc. Or many try to outsmart the stock and try to sell high and buy in for lower. How many people do you know that did better than the stock itself? I think it's close to zero. You will learn more people that fail than people who succeed. This is for sure. The problem is that we tend to think for the short term. If we put $1,000 in a stock and it goes up to $2,000, then we believe, let's sell it, buy a PlayStation and wait for the stock to drop and buy in for $1,000 again. We give ourselves an excuse to make selling look good and making it look like a smart move. We give ourselves reasons to take our winnings from the table. This kind of investing is what the big mass of investors do. Some just have more money and invest 100,000 or 1 million, but they are likely to take out the profit and buy a fancy car or a house when they double. The big problem of taking out profits or selling stocks when high is that we use the profits to reward ourselves or use that income to pay for our consumption. This is what 90% of the people do. Then some people will use those profits to diversify a portfolio until the portfolio gets so big that the investor is holding 40 to 50 stocks. The returns will get lower because the investors can't keep track of so many companies, or because the portfolio becomes similar to the stock index. We have a small percentage of people who will try to buy in the same stock but for a lower price. They try to maximize their amount of stocks they hold in the stocks they like. Every time they sell, they have to pay capital gain tax. You can see that trading stocks and taking out the profit will cost you money too. Most people are not good enough to become stock traders, and it's no secret that most stocks traders are not making more than the average Joe. If you are a stock trader, this is just like a job. My aim is to use the investment to build wealth and retire. Let me show you this. If you have invested in a stock with 30,000 for 30 years, you would make 1.98 million. If you would have been a good trader who is always taking out his profit and you make 18% in a monthly return, you are making around 5,400 per month, which is 64,800 per year. This multiplied by 30 years, this is 100.94 million. This is without deducting the tax, which would be about 20% of that amount. So you need to deduct another 400,000 in tax alone. The saddest thing is that they would retire with the same 30,000 in the account and still has to trade today to get the monthly payment. The guy who had invested the 30,000 for 30 years retires as a millionaire with 1.98 million in their account. The best thing is he will generate a yearly interest of 259,000 without working. He will make 4 times as much as the person who traded the whole life without ever working for that income. After 20 years, the long-term investor could retire and would make 64,000 in interest every year without working. We can see from the interest column that the trader made more in return than the long-term investor's interest in the first 20 years. But please remember, the long-term investor is still working in another job, which he used to pay for his consumption. The trader is using his investment time and his capital to make it a career. In the long term, you can see who the clear winner is. Your aim should be building a structure of income that looks close to this. I will link the video up here where I describe this structure more in detail. For me, it's important that I show my viewers and subscribers how their next 30 years can look like with the decisions they make today. The problem is that many people like to make 6,000 a month now, but don't realize that this is preventing them from making 259,000 a year in passive income in 30 years. My investment philosophy is to let the investment be an investment. The less we interfere, the better it will do. Humans do more mistakes than the economy in the long run. The economy will grow and the stock is forced to follow. So in all my investments, I just let it be, even when it faces extinction. You might know that XRP was facing the SEC last week and everyone had over 2 months to sell, but I decided not to sell. You can see that I still hold around 10,000 XRP. Selling means confirming the loss. In my mindset, all investments I do are already lost. Important for me is that I open my account in 25 years and use it as a retirement. Not every stock or not every investment will get there, But if only half of the investment get there, you will do very well already. It looks like XRP is surviving this clash with the SEC, and we had over 80% in gains already. Another big concept in investing is try to be early. Invest in something before it's in the news and before your friends and family talks about it. Last year at the beginning of the pandemic, I bought around 10 Ethereum for just $264 per coin. Now it's trading about $2,000 per coin, and I'm not selling it. For me, Ethereum will become a currency, and I will use Ethereum in the future to buy within the Ethereum network. I will buy assets or other valuables. My lifestyle is not depending on taking out profits of my investments. My investments portfolio also consists of 7 rental real estate properties and a business which generate passive cash flow, which I use for my consumption. I built a structure of passive income stream from multiple sources within 6 years living here in the United States. There was an initial investment of $300,000 which I used to buy a business in the United States, but I can tell you that you can have $300,000 within 4 to 5 years with a $35,000 per year paying job. You might ask me that $35,000 multiplied by 5 years is only $175,000. Yes, you are right. But if you are willing to live below your means and put every dollar to work with all kinds of investment, then it's possible. I have a cousin who is working for me in my business. He started 4 years ago. He makes $35,000 from the job, but he's investing. As I told him, he buys rental real estate, stocks and cryptocurrency, and his net worth is at $250,000 now. The United States has the best infrastructure to become a self-made millionaire within 10 years, starting with zero, just by working a $35,000 per year job. If you are interested in this topic and need guidance, please let me know in the comments. I like to give you more insight into this blueprint. Let's talk a little bit about the sacrifices, because everyone wants to become financially so free that they don't need to worry anymore. The problem is many people are not willing to sacrifice. If I tell you you can be a millionaire in 10 years, 99% of them already stop listening. Everyone wants to be a millionaire today or tomorrow. This is not how it works. I'm a millionaire, but look at the car I drive. I'm driving a delivery van because I get tax write-off and the mileage can be used for a tax deduction. I can go out and buy a nicer car anytime. I can go to any car dealership and sign a lease for a fancy car. The reason I'm not doing it is I don't want to screw up my DTI, which is the debt to income ratio. Let me explain you this part because it's important to understand how you leverage all your investments. Your DTI determines how high the loans you can get from a bank or a lender. If your debt is relatively high to your income, you will get less. If your debt is low, you get more. So if I buy a nice fancy car, my monthly debt payment is going up. This would prevent me from getting loans that I can use for investing in rental real estate properties. Many people are not giving a big thought about this issue, but let me show you why this is so important. We can agree with a car loan amount of $60,000, we can buy a fancy car like a nice Mercedes. I love Mercedes and always dreamed of owning one. I had purchased a used Mercedes last year for $27,000, which was built in 2017, but I returned it within 7 days because I wanted the money to be invested. That was a car I wanted to own for over 3 years. So you might understand how much I fight myself to get where I want to be. Anyway, let me show you what you are paying. You are paying $1,081 per month if you get a fancy car. If you are not buying this fancy car and stick to the car you have or drive a cheap $5,000 car, let me show you what you can do. You would pay $591 per month for a $125,000 mortgage loan. This is what I mean by saving your DTI. Use your DTI to make something that will increase your income. Use debt to increase income so you can keep playing this growing game. Let me tell you what you should buy with this $125,000 mortgage. Let me use one of my properties as an example. I bought this investment property with 15% down payment for $124,312. The property is worth $167,407 now. I paid 15% in down payment, so it was around $18,600 plus $5,000 approximately in closing costs. So my total investment was around $23,600. You see that the property has gained more than $43,000 in value within 2 years. But this is not all. You remember that the monthly mortgage payment was around $600. I have rented the property out and my tenants are paying me $1,350 in rent every month. So you make money from the appreciation, from the rent, from the tax deductions and the loan amortization. You have people who are paying for your loan. This is like people are paying for your piggy bank. In my case, my properties are my piggy banks. What I try to share in this video is that couple of decisions that you make can influence how you do financially in the long term. Buying a fancy car will destroy your ability to buy 2 rental properties, which will make a big difference in everyone's life. The good thing is you still can buy a fancy car after buying 2 rental properties because the rental is offsetting your debts. The only problem is you cannot buy 2 rental properties when you bought the fancy car first, unless you work harder, work extra shifts or get promoted. I really try by giving you examples like this to make it easier for you to make money, to have different ways to make money, which helps you to reduce your time at work or to give you less headache about your retirement. I can tell from experience that the first million is very difficult, but the game gets easier and easier. The game becomes so easy that you can buy properties for free every 6 months without using new money. But I think I will talk about this in the next video when you are interested. This video was all around the place, and if you have watched it until here, thank you very much. And please let me know what questions you have, or if you like me to dig deeper and explain to you more of those concepts. I'm doing this YouTube thing to share with you what I know and see if there are things that can help you to get closer to where you want to be. Anyways, for legal reasons, let me tell you that I'm not a financial advisor. I'm just a guy on YouTube. Please remember, do your own due diligence and hire a financial advisor if necessary. Please like, share and subscribe to my video when you don't want to miss out on any new stock information and investment opportunities. Thank you so much and see you hopefully in the next video. Thank you. Bye.